Gold IRA Investments. When it comes to a discussion about gold IRA investments, it is hard to look past tangible gold assets as a means to grow your retirement savings. Let's face it, when you do an accounting of most other forms of investment, they eventually trickle down to being hedged or physically backed by tangible gold assets. This is how governments secure their treasury, and those stockpiles of gold serves as the basis for the true wealth of any country or government. It stands to reason, therefore, that those with gold IRA investments can benefit more by embracing physical gold assets as opposed to paper investments like ETFs and gold certificates. As such, it is very important to understand how best to secure and manage such an IRA. What you need to know about gold IRAs. While IRA investments in gold are far from being straightforward and are heavily regulated by federal laws on retirement savings and gold investments, these account form some of the most productive IRAs available. This is an offshoot of direct investments in gold, which constitute some of the most attractive of the many options currently on the market. Some of the reasons that establish the reliability of gold as an investment include constant high demand from industries that use gold as raw materials. Notable industries include the electronics and semiconductor manufacturing sectors, as well as those dealing with jewelry. The high demand from these sectors keeps the gold market afloat and pushes the prices on an upward arc on a regular basis. The numismatic value of coins made from gold makes it a really attractive asset not only for coin collectors, but also for those who are eyeing a piece of history. In the U.S., gold coins are a great symbol of the growth of finance and economics in the country, making it one of the more valuable pieces to keep, hence adding collectible value to the coin assets. These factors are backed by gold's performance in times of dire economic conditions, starting with the 2008 global financial crisis. Within a span of 4 years, from early 2008 to early 2012, gold posted a 300% growth, rising in value from $400 per ounce to $1,600 per ounce. It bears mentioning that within the same period, most of the notable blue-chip stock investments, bonds, ETFs, and other paper currencies bottomed out, resulting in many investors filing bankruptcy to protect themselves from further losses. Meanwhile, those who have made the decision to invest in gold, whether via ETFs or physical gold assets, retained and further grew their assets at a time when the economy was most vulnerable. This is where the insistence for gold IRA investments became notable. After 2008, when most investors, employees, retirees, and seniors suffered significant losses to their life savings, many turned to gold in order to hedge their assets. This is where the importance of gold IRAs is brought to the fore. Physical gold assets via gold IRAs. According to federal regulations, IRAs can be made to invest in physical gold assets provided that they are duly registered and authorized to do so. This separates them from conventional IRAs, which can be made to invest in stocks, bonds, and even gold ETFs, but are not allowed to hold physical, tangible assets like gold, silver, and other precious metals. It bears mentioning, therefore, that a deliberate effort is necessary to have the conventional IRA converted to gold IRA before any investment in physical gold can be made. Once this step is done, it becomes a simple matter of instructing your appointed fund manager to purchase gold assets using the amount in your IRA. Again, because of federal regulations, all the assets will be kept in the custody of the fund manager, and at no time can it be withdrawn by the investor. Still, the investor has complete control over acquisition and divesting strategies, and this is something that the fund manager would be more than willing to work through for you in order to grow your portfolio using gold. As a last note on the matter, it is important to remember that despite gold's almost assured returns, there are no forms of investment that are fully safe from risks. Thus, investment experts caution investors from putting all their money into physical gold assets. It is best to diversify and properly allocate portions of your IRA to include stocks, bonds, and mutual funds on top of the physical gold investment. By doing this, you are shielding yourself from significant losses in the event that one investment bottoms out due to unforeseen circumstances. Gold is the way to go. Gold presents itself as a very attractive option for investors, but in the end, it still requires careful management and informed decision-making so investors can fully take advantage of its promised return. These investments present the most practical approach to putting your money in gold. So if you have yet to become a gold investor, perhaps it is high time to assess your position.